Good morning, good afternoon, good evening to all of you. My name is Gabriel Elvandy Dondokambey, and today I will present to you about my undergraduate thesis findings, which were supervised by Pak Afiandi Okta Maulana, with the title Changes in Effective Tax Rate Due to COVID-19 Tax Incentive on Companies' Profitability, a case study of industrial companies listed in the Indonesian Stock Exchange from 2017 to 2022. Before we start, here's the outline of the research presentation, which is the same outline used in the writing of this thesis. The first part will be introduction, continued with literature review, and then research methodology, results and discussions, and will be closed with conclusion. For the introductions, we start from the background that comes from my personal experience and our own experience about the COVID-19 that had profoundly influenced the economy. According to DIFIC in 2023, um, the COVID-19 led to a 3.4% reduction in global gross domestic product, which is also experienced by Indonesia. Well, according to Indonesian Central Statistical Authority or BPS, the Indonesian economy contracted by 2.07% in 2020. And responding to the OECD or the Organizations of Economic Cooperation and Development suggests the use of fiscal policies. And Kanto et al. Uh, advised that in certain cases such as this, the government should act as the last resort to stabilize the economy and help the recovery effort. And the Indonesian government uh, issued a tax regulations stated in PP number 30 year 2020 concerning income tax reductions for companies that had gone IPO, where this tax regulation stated that there will be a 25% to 22% tax reduction or 3% tax reduction for companies that had gone IPO, and for companies that had gone IPO with shares of more than 40% owned by the public, there will be another 3% reduction. So 3% and 6% possibility of income tax reductions. And in 2020, surprisingly, Indonesian economy experienced a growth. According to the BPS, there was a 3.69% of economic growth. And we want to test whether that this economic growth is associated to the changes in corporate income tax rate. Therefore, this study will assess the association between effective tax rate as the measurement to tax incentives and companies' profitability as corporate financial performance measurements. And for the problem identification, we used the lever curve that demonstrates the two extremes of tax rate and its effects on government revenue and the public. And this tax incentive resulted in income tax reductions. And we want to test whether the effective tax rate influenced the economic growth in 2021 by assessing industrial sectors as the samples of Indonesian companies, as the industrial sectors contributes to 20.07% of Indonesian company in the year 2019, according to Databox, which means that the industrial sectors contributes the biggest to the GDP proportion. Therefore, we arrived in three research question objectives, which are to find the utilizations of changes in ETR and its influence to return on assets and return on equity as the measurements to corporate profitability. And the third one is to provide insights to governments and hopefully could add more on the resources for contributions in further fiscal interventions. The benefits and contributions for academicians is to challenge the notions that tax incentive is an effective tool to enhance corporate financial performance, especially in bad times. And for the government, it is to provide empirical findings and drawing practical implications as a pragmatic resource for policymakers. We continue with the literature review, which is presented in this table. On the left side, we see different variables, effective tax rate as the independent variables affecting return on assets and return on equity, which according to several researchers, there's a negative or either positive relationship between the two. And however, either relationships or either correlations are significant. And we want to test that whether it exists also in Indonesia. So two hypotheses we used is the changes in effective tax rate significantly influence return on assets, and changes in effective tax rate significantly influence return on equity. With the use of several control variables, which are leverage, firm size, and firm age, as according to several findings, leverage, firm size, and firm's age influence uh, corporate profitability too. I assume that it is better to control in order to find a more objective relationship between the independent variable and the dependent variables. This is the research framework. On the left side is the independent variable and the control variables, and the line which expressed the possible correlation or influence to the dependent variables. For a research method, we use cross-sectional quantitative research, meaning that there are several companies used under some time period of observations. Well, in this case, the data is obtained from the financial statements provided by companies, either in the Indonesian Stock Exchange website and mostly from the company's website. And we use the secondary data. And here, in this table, it is presented that there are several measurements for the variables. For the effective tax rate, it will be corporate income tax payment divided by earnings before income tax. This is according to Richardson and Lannis in 2007. However, Fang et al. In 2022 and Dewi and Rohman 2023 also uses the same formula for ETR. And for profitability, we use return on asset and return on equity with net income, total assets, and total equity. For leverage, according to Brenton in 2004, it is better to use debt to equity ratio. So we adopted this too. And for firm size, we use total assets. And for firm age, we use year of annual report subtracted with year of establishment. And for the data collection and sampling, there will be 12 companies from 63 industrial companies listed on the IDX. This is because we use only the data in the primary table of the IDX. The reason why is according to the IDX, the companies listed in the primary table are the most stable companies, and therefore um, we use these companies. It'll result in 72 observations from 12 sample companies in 6 years of observations. And here's the regression model. For the return on asset and return on equity, we use a natural logarithm to transform the value in order to enhance and create a more objective and better results for the regressions. And the regressions for the regressions we use Stata MP18 as the program to perform this examination. For the results and discussions, so here is the descriptive statistics showing that there are 72 samples for each variables with the minimum and maximum values, and then the average value and the standard deviation. And for the classical assumption test, for the normality test, we use the Jark beta test, which examines the skewness and kurtosis of the residuals from the regressions. So first we perform the regressions and then predict the residuals, and the Jark beta test examines the distributions of the residuals And a good Jarpera test should result in a value above 0.05, which in here the joint test for both regressions is um, demonstrate a normal distribution for the data. However, in this case, we use a little bit of interventions called Windsoraizations due to a very abnormal data distribution. And the Windsorization did not outlie any data. However, it changes the value of the data far from the average to the data to the value of the data nearer to the average. And for the heteroscedasticity test, we use the Bruch-Pagan, and the result is there is no heteroscedasticity. And for the autocorrelations, we use the Durbin-Watson, which in both regressions, in both dependent variables, um, the Durbin-Watson test resulted in value between -2 and +2. So there is no autocorrelation. For the simple linear regressions, we see that there is a positive uh, correlation between the effective tax rate as the independent variable to the dependent variable with the significant level or value from the t-test of 0.00, which is the only variable that have a significant influence on the return on assets. And for the t-test, the whole regression is proven to be significant with the value 0.001. However, with the coefficient of determination test results of 0.2472, meaning that this regression only covers 24%, 24.72% of the whole samples. And for the return on equity as a dependent variable, the result is very similar. The effective tax rate is very significant with the value of 0.00 and a positive value of 0.605. With the F-test, the whole regression showed a significant value of 0.000. And the coefficient of determination test results is also considerably low with a value of 0.2961 or 29.61%. And for the discussion of this test results, both hypotheses are proven to be supported. However, it is a bit different from the theoretical or the logical um, flow of thinking. As in this case, or using this data, I found that there is a positive and significant relationship between tax rate, effective tax rate, and return on assets and return on equity. With the discussion that accounting is very complex, therefore, there might be several tax burdens shared among other stakeholders, or tax liabilities substitute with lower expenses or lower salaries and wages or higher product prices that will result in an equal or higher profitability with changes in effective tax rate. For the conclusions, the effective tax rate positively influence and significantly influence both the return on assets and return on equity. However, with certain limitations that um, there is a potentially skewing results as we only use 12 companies out of 63 companies and potentially inaccuracies due to tax planning strategies because 44 out of 72 sample years showed that companies paying below the statutory tax rate. And therefore, for the suggestions, there should be analysis by also involving tax planning and tax aggressiveness in this case, with the hope of finding uh, the influence of fiscal policies on household welfare preservations. And for the data, and hopefully more data won't have to result in Windsorization or outlying data. And for the research implications for both, hopefully this would result in empirical findings for the notions and for the government. That is all. Thank you.